I'm Peter White. Welcome to the Inside Network. Welcome to another episode of INDepth. My guest today is Francyne Mu from Franklin Templeton. Francyne's the Portfolio Manager for the Global Growth Fund. Welcome, Francyne.
Thanks, Peter.
We start off by talking about your role managing this fund.
I'm a co-portfolio manager with Don Huber, and we manage the Global Growth Fund. It's a high conviction, research-driven portfolio. So we're essentially stock pickers, and we have a long-term investment horizon. And we try to sort of look or identify companies which are earlier in the growth phase. We look for companies which have a strong competitive moat, can generate very strong free cash flow, have good management teams in place, and we hope that they will be able to grow with us, over time. The other way in which we look at risk management, I think also differentiates us from other peer global managers, is the way in which we look at economic overlap amongst the holdings within the portfolio, so that if one domino falls, it doesn't sort of cascade through the rest of the portfolio.
The fund's had incredible performance, but achieved without having the FANG or FANG Plus stocks. How do you explain that?
We're a bottom-up stock picking strategy, and we're very research-driven. And so what we try to do is we try to identify companies within the best business model within a particular supply chain. And so we haven't really needed to sort of invest it in some of these mega caps to get the same performance. We invest in companies such as Zscaler, which are emerging sort of business models, especially in cybersecurity. And in this current environment where people are working more from home, there is an increasing need to sort of fill those gaps within that cybersecurity space. So companies like that are the names that we like in our portfolio.
Do you specifically say we're not going to go above 50 or 100 bill in caps? Are there limits, or is it just your process that causes you to look at these so-called smaller companies?
There's no hard and fast rules. It's more about the business model. And I think that's really important in terms of how we identify the names that we hold. The business model is key. Having a strong competitive advantage or a moat surrounding that is what determines whether or not companies will be winners or losers in the long term.
Must make for some interesting dinner party conversation with your peers when they're all holding Amazon, Netflix and Apple and you guys aren't.
Completely. But again, I think as companies grow, they may be less nimble in combating some of the new competitors in the market. For example, a name like Shopify operates in the e-commerce sector, similar to Amazon. But they identified an opportunity in the SME market whereby, they started early on as a website builder, but have now grown to sort of provide an ecosystem to help support SME companies and now enterprise companies in building their own brand and website to sort of meet that e-commerce, demand. And so we think that has been a formidable, competitor to Amazon.
At the granular level, what's the stock picking process? Do you have so many stocks on watch and then keep an eye on them until they reach certain hurdles and then you go in, or?
We look at each of the sectors and we try to sort of identify opportunities within a particular supply chain. So at a certain point in time, all the analysts are sort of keeping watch of, certain names which are interesting to them. I think what we try to do really is to try and find the best economics within that supply chain. So if I can give you an example, in the auto industry, per se, we're not trying to sort of make a call between BMW or, Toyota, but rather we like names such as Aptiv, which is a, auto supplier, which will benefit from the sort of increasing content in cars because they supply active safety, they supply the neural networks within cars. And so, over time, that secular growth should support growth of that company.
What's been the best monthly performance you've achieved and what stock?
One of the best stocks that we have held in the portfolio is Mercado Libre.
What do they do? Many people wouldn't know that name.
So it's an online marketplace based in Latin America, where when we first bought into the name, e-commerce as a percentage of retail sales was, less than 1%. It's now 3 to 4% of retail sales. And if you compare it to other, countries like Australia or the US, where you've got sort of 15 to 20% of retail sales, there's clearly still a lot of runway for growth for that company.
What was the capitalization when you bought in?
So when we first bought into the name in 2010, it was $2 billion in market cap. It's now $57 billion, and we continue to like the story and continue to hold the name.
Is it likely to spread its wings beyond Latin America?
I think there's still a lot of growth opportunities for them to sort of penetrate the Latin American markets. Brazil is their largest country at the moment, but they are in countries such as, Colombia, Mexico. They've done really interesting things such that it's not only just an online marketplace, but they've built an ecosystem around that. So, for example, they've got a payment system called Mercado Pago, which if you sort of look back to what eBay did back with, PayPal, they're first penetrating the sort of online platform marketplace, but they're out now offering Mercado Pago to sort of third parties to process payments. A really interesting pivot to the business model. They also have, revenue opportunities in terms of advertising revenues, as well as, the ability for merchants to open online shops on their website. So similar to Amazon from that perspective as well. So I think, there is still a lot of opportunity for them to sort of continue to grow in Latin America.
Putting COVID to one side and putting the FANGs to one side, are there emerging business models that interest you or you're on the lookout for?
I think pre-COVID, we've seen a lot of innovation and developments on the technology side, or industries in which technology has enabled, that next step for a lot of companies. So if I think back to that, I would have to say companies such as CoStar Group, which has built up a 30-year history of, commercial real estate data in the US. They've started to sort of digitize, that information, basically put it on a technology platform. And this helps to enable transactions. And we know that, in a post-COVID world, or currently, there's going to be a fallout in terms of the real estate market. And we think that CoStar will be well placed to sort of facilitate transactions in the current environment. Previously, transactions were very labor intensive. And now with all the data going online and on a tech platform, they'll be able to facilitate transactions more easily.
Francyne Mu, thank you very much for your time today.
Thank you, Peter.